Welcome to our Botswana discussion. And the relatively stable sub-Saharan African country has seemingly lost some of its sparkle. The liquidity crunch has got markets concerned. The state is trying to find fiscal wiggle room while diamond sales plunge. Now, for this discussion, I'm joined by ETM Analytics co-head for Africa, Takudzwa Ndawona. Tux, thank you very much for joining me. I want to start with the latest news out of Botswana, and that's the government seemingly eyeing some of the public offices' pension fund to give it a fiscal bump.
Yeah, so earlier this week, Ilze-Marie, the Botswana government approved a bill to borrow around 3 billion pula from the Botswana Public Officers Pension Fund. And that funding is meant to help the government meet its financial obligations and other costs. The move to tap into pension funds reflects economic and fiscal pressures that have been triggered by a downturn in diamond revenues and increased budgetary pressures. The downturn in diamond revenues has resulted in Botswana lacking mineral revenues, and that's seen them experience wider than expected budget deficits in recent history. I mean, if you look at the financial year 2024-2025, Botswana is set to face a budget deficit of 9% of GDP, and that's the highest in since financial year 10-11. The Botswana government expects to experience fiscal deficits of around 5% throughout financial year 27-28. And that just highlights the difficult fiscal position they're in. And so they have to address these fiscal deficits. So hence they've looked at other options, including borrowing from the pension funds.
And obviously, the reason for these shortfalls is what's happening with diamond sales. Now, Botswana is the second largest producer of diamonds in the world. And when your economy hinges on a single commodity like this, your fiscus is going to have a bad time when prices wobble. And we saw diamond prices plunge, I think it was between 15 and 20% since the highs that we saw back in 2022. So, And obviously the prices plunged because there was this oversupply, there's a weaker demand. And when you look at an economy like Botswana with this very concentrated economy, it's obviously an obvious answer and solution to go, well, just diversify the economy. But is there space for the Botswana economy to diversify into?
Yeah, so I mean, diversification has always been on the policy agenda, but obviously it's now a key priority given that downturn in the diamond market, and there are several possibilities. I mean, Botswana could diversify its mining sector. It has several deposits of coal, zinc, nickel, and uranium. And if you see the Kalahari Copper Belt, that's emerging as a promising copper production region due to its underexplored high-grade deposits. And we've seen the likes of BHP, MMG, and Sandfire invest a lot into copper exploration in those areas. So what that essentially does, it positions Botswana as an emerging player in the global copper market. We've also seen the Botswana government emphasize more on value addition rather than relying on exporting raw mineral exports. And we've also seen diversification efforts targeted towards tourism, manufacturing, and agriculture. However, Ilze-Marie, these are all long-term projects and they require attracting significant private investment, in enhancing infrastructure and fostering innovation. So it will take some time.
Yeah, like you said, this is going to take some time. It's not an overnight solution, whether you tap into the pension fund, which, by the way, is also, we know they tapped into the pension fund, but details are slim on exactly what they're going to do with those funds. Is it going to go into infrastructure development? Is it going into social welfare programs? So we're not exactly sure yet. But diversification is going to remain a struggle. And the fiscus, meanwhile, is in a tight position. So is there a possibility that they can turn to debt markets? I mean, what does Botswana's debt profile look like at the moment?
So Botswana has a relatively low debt profile. If you look at the latest data, its debt to GDP ratio is around 25.8% of GDP, which means that the government has capacity to ramp up borrowing before it reaches its 40% limit. However, I don't think the government is going to look externally given the unfavorable global financial conditions at the moment and the interest rates that are out there, which means that there's going to be a heavy reliance on domestic borrowing. And as you know, increased domestic borrowing is going to lead to higher yields and steeper borrowing costs. As we've seen in recent auctions in Botswana, there's been significant borrowing at the front end of the curve. Our government is focused on shorter dated treasury bills, and we've seen those yields surge due to the liquidity challenges. And we foresee that front-end yields are likely to continue to rise as government continue to prioritize borrowing at the front end, given the lack of liquidity in the market. So ultimately, Ilze-Marie, there is no short-term fix for Botswana. I think if they do exhaust all the options that are there available at the moment, they could look to approach the IMF for a program. Given its low debt profile, the IMF would be happy to help Botswana address its balance of payment programs. But in the short term, I think the liquidity problem is likely to persist, and we could see front-end yields continue to surge higher.
Well, it seems like Botswana is going to remain in a tight spot until they figure out a way how to get out of it, but it's not going to be an overnight solution. But let's hope Bots can find its sparkle again. Tux, thank you very much for your time. And of course, if you want any more information on Botswana or any other African country, please feel free to reach out to ETM Analytics. Thanks, Tux. We'll chat again soon.
Thank you. Thank you, Ilze-Marie.